There's Best Buy. They are popping it here as the electronics retailer. Its adjusted earnings per share came in at $1.15. That beat analyst estimates. Did miss on revenue. Saw some steep declines in sales across categories, which you might expect. So it's interesting here, Diane. I guess just the expectations were pretty low going into
this. So they jumped over the bar was here.
Right.
Yeah.
Like, exactly.
Okay,
they hopped over.
Exactly. So, but they're optimistic. Their outlook is improving. They feel like the worst is behind them in terms of the trade away. They said they're noticing customers doing some trade down. And we did expect for them to suffer in terms of their performance compared to other retailers because consumer electronics. One, we saw this surge during the pandemic that has certainly cooled off, but now they feel like the worst is behind them in terms of sales. But, so they're getting a little bit of a pickup in action today, but they're down double digits year to date. So, and
I guess the momentum of the declines is slowing a little bit. In other words, the overall comparable sales this quarter down in the neighborhood of 10%.
Yeah.
In this current quarter, it's going to be a drop of 3 to 6%.
Yeah.
So it's bad, but it's not
as bad. Exactly.
And I guess that, along with the earnings beat, seems to be responsible. You see there some of the individual groups there. Those are the comp sales. Computing and mobile phones down a lot. Consumer electronics down a lot. Appliances, entertainment. Interestingly, just interesting to see.
I was surprised by that
comp
number.
Sales on the rise. Actually, those aren't comps. Those are the overall sales. That we're seeing gains. But comps also saw gains in entertainment. So. Interesting story.
I know, and they're still dealing with inflation pressure as well. So, that will continue to be a headwind clearly for Best Buy.
Definitely.